We'll give it one more minute just to let some folks trickle in. I know it was a little hard to find the room, and then we'll get started. You can text all your friends and tell them, come join us. Yeah. All right, well, we'll go ahead and get started and let folks trickle in. Thank you for joining us. Very excited for this panel and for our great panelists. I think it's gonna be a great conversation, so thanks for joining. My name is Amee Parbhoo. I'm the managing partner of Accion Venture Lab. We are a seed stage, early stage fund focused on fintech globally and made a number of investments across the continent. And embedded finance, this topic is something I feel like I must say in my sleep. I think about and talk about in my sleep because as a fintech investor, there's no way to ignore it. The power of embedded finance, the way it's shaping the types of products and the types of delivery mechanisms that actually are bringing financial services to people around the world. And we think about it in sort of many different layers, right? There's the infrastructure you need to make embedded finance work. There's the enabling technology that kind of sits above that, the API layers that actually make these financial products part of the ecosystem. And then it's these marketplaces, these platforms that do everything end to end, including financial services. So all of this means we're seeing an incredible blurring of line. We're seeing incredible new innovations in the space. And I think we've got 3 examples of that here from panelists who will hopefully tell us more about how embedded finance is shifting what they're doing. So with that, I'll just turn it over to each of our panelists to briefly introduce themselves and their companies, and then we'll take it from there. I know we're a little behind, so we'll save some time for questions and make sure we're getting you back to, I think it's lunch after this, so definitely don't want to be late for that. But Milkah, maybe starting with you.
Okay, sure. So my name is Milkah, and I work at Cellulant, and I lead the strategy team in Cellulant and the people team. We like to say that strategy is people and people is strategy. So those 2 things are pretty tied together. Cellulant is a Pan-African business in the continent, and we really do the end-to-end ecosystem work of making sure that payment methods are made available to merchants to help them make payments and to allow their customers to make payments or for them to collect and also to do payouts. We therefore solve the fragmentation problem that is in the continent by bringing together all APMs, alternative payment methods, and putting them in one API, exposing those to merchants and allowing them to get settled real-time, connect across the continent with one API, one contract, and to actually be able to do the collections and payouts. We operate physically in 18 markets in the continent and provide services in about 35.
Great, thanks. Harry?
Hi, I'm Harry Croydon. I'm the CEO of Micro Insurance Company. We actually started in Africa 20 years ago with the idea of offering simple products to people in Kenya and Ghana initially. And we did this because of, people just don't have insurance. They have all the problems, they have all the risks, they have all the dangers, but, they don't get, to have insurance. It's very difficult for people to buy insurance. So we came up with the idea of, developing simple insurance products and then selling them through distribution partners. And that initially was through, for like farmers, small businessmen, and the like, selling them with, along with loans and their seeds and things like this. So this is how we started and why we started that. And we've taken that idea really and grown that idea with technology because of, embedded insurance, embedded finance needs technology. So we've built the technology now to enable us to scale these services, not only across Africa, but also globally. And we have 3 or 4 million customers now that use our products, and this is growing very well each year. We operate in Kenya, Ghana, South Africa, and also we're just starting with some partners in Nigeria. And we've also, as I said, taken this whole kind of concept into the US, into South America, and in Asia, and principally, we're looking in Pakistan and India to grow the business. We also invested in Africa. We have set up an insurance company, which is just getting licensed in Kenya, and that takes a fair bit of investment, and also in South Africa, and we're just getting a license in Ghana, so that will help us expand our business. And recently, we also set up a syndicate in Lloyd's of London, and that really brings a massive amount of kind of capital that we can push into Africa, and other countries, and make use of that capital to help our partners and our kind of InsurTech partners grow. So this is what really our goal is to find partners that need capital, need product innovation, need technology, and offer our services like an insurance as a service partner to the continent. So that's me.
Thanks.
Thanks. So I'm Fehintolu. You can call me FT. I'm the CEO of Credpal, and we are a buy now pay later company. We allow consumers in Africa make purchases and pay in monthly installments. So for us, right, we saw a huge problem, and it's the fact that most Africans have to pay in full for everything they're trying to buy. You're trying to buy a phone, trying to buy a laptop, appliances, and you have to pay cash and in full for it, right? So our goal in Credpal is to simplify that by allowing them buy those items and pay in installments. Essentially what we're doing is we're bundling credits with purchases, right? So the customers are not necessarily taking loans, but rather they are taking assets which are being financed on the back of that. So for a lot of our customers, they got their first credits entry, into the bureaus, they got their first credit score, largely through Credpal, which is very good for them, and also very good incentive to keep performing well down the line, in credits. That's the one side. The second side too is we heavily finance smartphones too. And that's because the African, for most people, the smartphone is the first thing you really want to buy, right? And because it opens you to digital inclusion, financial inclusion, and all of other things too, right? So for us, we also heavily drive device financing. And that not only gives you a credit score, it also gives you access to financial services. It comes with the Credpal app, where you can also do a whole lot of stuff on. So for us, the goal for us really is to enable people access credits in a sustainable, safe, and productive way to the economy, and generally, we see it as a very foundation of, driving growth in the country. And we also work heavily with merchants, so we don't own these devices, we don't own this inventory. Rather, merchants are the ones that offer Credpal as a service, to their customers, right? So merchants across Nigeria, and we're currently in Kenya too now, are able to offer point of sale financing to their customers, increasing their sales at the same time. For us, in fact, our best customers are the merchants, because they're the ones that really want Credpal the most, right? Because they want to make more money, selling their products, right? So with a single transaction, we're helping the merchants and we're helping the customer, to live a better life. Yeah, so that's what we do at Credpal.
That's great. And we'll stick with you because I think, from the core, you guys are embedded finance. So maybe starting with you, how would you define what embedded finance even is, and how do you think about its relevance in your business model at Credpal? Yeah,
so it's at the core of everything we're doing in Credpal. Every transaction comes with you getting credits, right? Without credit, we're not doing our business, right? So we see it as a very important part, because one thing we saw earlier on is the fact that a lot of people don't necessarily want to take loans, right? So if getting on the credits bureau and having good credit history means you taking a loan, then a lot of people want to do that, because even in Africa, there's this stigma that comes with taking loans. But almost everyone we talked to earlier in our journey said that they would buy something and ask their resellers, can I pay in 2 installments? So a lot of people are comfortable buying an item and paying twice for it, but they're not comfortable taking a loan from a bank, right? Because they even see banks as sharks and all of that. So for us, we saw that that huge need in the market, right? And we're able to offer them loans through purchases, right? So that's like the core of it, And then the second part of it is the fact that, for a lot of our customers, they come back later to thank us because, trying to get a loan the next time from another person, right, becomes a whole lot easier because there's Credpal on their history, at that point, and they can also even use as a reference when they're going to go get another loan down the line, right? And our goal really is not only to offer these loans, right, but essentially to make sure that it's part of a transaction. So it means that the merchant too is getting value at that point, right? A lot of people can take a loan and go gamble with it, but with Credpal, you're actually getting value, both on the merchant side and on the consumer side on that side. So yeah, is that out of everything we're doing. And the last part, which I mentioned on the smartphone financing, for us, it's very dear to me. And that's because, we discovered one thing, that a lot of the demand coming for BNPL were for smartphones. And that's because for most Africans, getting that smartphone is like the first thing you want to get, right? I don't think of buying a TV or buying a refrigerator when I don't have a smartphone, right? You get, so for us, we had to really take that market seriously, offering them devices to be financed, partner with OEMs, partner with telcos, to get that driven, and we're seeing a lot of growth on that part right now, and for us, it's like, not only are we giving giving people in Africa a chance to improve their credit score, we're actually giving them a chance to be digitally included, get access to information, there's a lot of positive stories coming out from that to beyond that actual financial inclusion bit of what we're doing. So for us, embedded finance is like the heart of everything we do. And we see it even going beyond that into other areas, like maybe insurance down the line.
Yeah, that's great. So it's creating that seamless experience. It's bundling it with a non-financial product. It's, creating these win-win value propositions for not just the financial service provider, but merchants, for everyone else in this
Absolutely.
ecosystem. Harry, turn to you. I mean, how do you define embedded finance as it relates to microinsurance? And, for you, was it something that you've kind of layered on top of your existing offerings, or from the beginning, you were sort of doing embedded finance?
Yeah, well, yeah, very much from the beginning. I mean, with insurance, I don't think anybody wakes up in the morning and thinks, I know, I must go and get an insurance policy. But they do wake up in the morning with issues and fears and things that happen, could happen with them. And if they take out a loan, sometimes if the person dies, then their family have got the loan. So this is all these sort of things that maybe stop things. And as you know, in the rest of the world, many things happen only because of insurance. You can't get into an Uber without insurance. You can't go and make a movie without insurance. You can't do all these things. So what we wanted to do was make insurance simple and make it relevant to people. And in doing that, it's really bringing the insurance product right into something that they're doing, like, like if they're a farmer, putting it into their seed packet, if they're taking a loan out, embedding it in the loan so that it is relevant to that actual transaction that they're taking, that they're doing. And with the advent of mobile phones and big data and the cloud computing, all this is makes it more possible. When we started, it wasn't really possible to sell 5 million policies, simple policies embedded into a telco operation because we had to write the policies in paper. Now we can embed it with APIs and automatic robotic processing, and we can service these things. So it is very much linking the kind of technology that we have today with a relevant product and selling it through a kind of a distribution channel, so that the people who take the risk, in that moment, I taken a holiday, or they buy a smartphone and they might crack the screen, or they take a loan out, or these things. They get the little insurance policy that goes along with it to protect that actual individual thing, and that's how we're kind of defining embedded insurance. Yeah,
and I think it's so interesting, just the comparison even so far of, people want to buy a smartphone. There's an inherent demand for that. People don't necessarily want to buy insurance, but the power of embedded finance to sort of, create seamless experiences and create more demand, I think exists regardless of that product. Yeah. Milkah, I'll turn to you. Yeah, same question. I mean, how do you define embedded finance? Cellulant has been working in payments for for years. Is it a new thing? How have you thought about it?
Yeah, So it's not a new thing, but we actually started off from the very ground, right? Which means that today, if you want to give somebody, you want to give them lending, you want to lend them something, you want to allow them to actually be able to pay. A lot of the continent is not banked as yet. So where do you actually put the money, right? So you want to give somebody money and you want to lend them digitally, but where do they do that? So we actually started by building out the infrastructure that brings all of that together. So all these payment methods across the continent that actually allow you to have a place where you're able to receive the funds. So it's sort of it's your bank account, right? So bank accounts are one part, but that covers maybe 20% of the population in the continent. Mobile money wallets then begin to take you to almost, in some countries, as high as 70%, 80%, like in Kenya, or at least to 50, 60% in allowing that. And to an even greater extent in some markets where you hold your own wallet as a fintech, to actually allow people to have a place where that cash, when you're giving them a loan or you're asking them to pay for something, they're actually able to have it. And then providing that, first of all, as a service from a B2B. So we are a B2B business. And the first person who actually has the biggest problem when it comes to payment methods, and then the ability for them to get loaned. And remember, it's not just large businesses. It is also what you'd see as medium to small businesses. And the ability to actually be able to collect from all of these payment methods, then create a history so that when Credpal comes and is loaning to a merchant, they're actually able to see what is the history, what do I need to do? And then going even further to say that Milkah is a consumer of that merchant and she needs a phone, how then do we, can we be able to see how she's been paying in the merchant, and then what is the credit history, just being able to get that data together. So for us, from an embedded finance perspective, we sort of have two aspects of it. We partner a lot with all sort of what you'd see as the businesses that offer embedded finance at their core, to allow them to actually have all these wallets available to them. And then this gives them access to the merchants, and then gives them access to the merchants' consumers, which then allows just the full ecosystem of access to be available. We then also take some of the partnerships and offer those loans directly to our merchants who actually need it, to shorten the working capital cycle. A lot of the payments that are made by most of the mobile money operators are done almost 2 days after, 3 days after, etc. If you're a small merchant, you have a 3-day window there where you're not able, and these are kiosks, in some instances, you have a 3-day window there where you're not able to pay. So we bridge that gap also by making sure that we are partnering with credit providers who are able to provide that working capital. So it's really full ecosystem.
Yeah, and that important infrastructure on a continent that's still largely cash driven, to be able to offer that and let these guys do the businesses that they want to do.
Exactly.
Which is really, really important. I'd love to turn to just in general the current market and how you think about it. I mean, embedded finance is exploding around the world. I mean, it projected to grow 10x in the coming years. What makes embedded finance in Africa different? What's making it a particularly compelling time in your minds and given your businesses today?
Yeah. So it's a very good question, right? So I'll start from, if you look at a developed market like the US market in itself, right, and even in some other markets, you discover that you're getting a good credit score, you qualifies you for mortgage and a lot of other things down the line. Even with insurance too, you can't drive a car without insurance, even in Nigeria. And the reason thing about it is the fact that for most economies, they've seen that embedded finance is actually a solid foundation to build the economy of the country. So even though your mortgage might not look like a loan, but it's actually a loan, right? Your car financing too, and everything you do, even your rent in itself too, right? You could look at it that way. But in Africa, it's still almost cash-based, 100%, right? So for us to move to that level of evolution as a continent, of developers as people, we need to be able to effectively embed finance into almost everything, right? So today, for instance, one reason why we take insurance very seriously is because, at the initial stage, our customers weren't dying. We had a few customers, so they weren't all dying. But as we grew our customer base, people started dying, right? So we're seeing risk coming from a customer not being able to pay back on his device. Why? Because he's dead, right? So we had to bundle life insurance into every transaction that we're running, right? So if you take a look at that, that means that the insurance company we're working with automatically has business because Credpal is offering those devices on credits. So I think it's a natural evolution that we're seeing, and it's because generally across the economies, across developed economies across the entire world, insurance is very key in de-risking things. Credit is also very key in growing the economy, increasing the GDP, gives people's purchasing power, driving merchant sales, right? Like likes of Apple today, Best Buy and the rest of them all rely on using credit cards to make those purchases that customers, get access to. So just see us as being like 10 years behind where the US is today. And hopefully companies like Credpal and other companies can help drive that growth, towards where most developed countries are today in a safe and sustainable manner.
Yeah. So, really picking up from what you said, I think, the fact that we've got the internet, the mobile phones and all this kind of infrastructure now and getting everybody kind of a bank in their pocket or an insurance company in their pocket with their mobile phones. This is the key that allows, places like Africa and Asia to skip over all the development that's happened in the Western world. Otherwise you'd be like 300 years behind, if you like, because of, that being only 5 or 10 years behind is because of all that kind of technology. And I think in terms of the scale of the opportunity and why, we're all here today and why we are very, very excited about it is because of, if you look at, say, America, the penetration of financial services into the GDP is very, very high. And insurance, it's at like 11, 12% of GDP. Whereas in a lot of African countries, it's like 1% or 2%. So if you just take that simple equation, we're a $6 trillion financial services insurance industry, that can easily double just by, approaching Africa sensibly and Asia sensibly. It's a massive, massive, opportunity. So, and then coupled with, the technology and this sort of new idea of partnering with people and the micro products and the micro services that we're now seeing, and kind of subscription mindset in the world where you don't buy, you don't buy things, you kind of rent them because it's better for you. That's, I think it's going to grow all of these sort of micro services, micro loans, micro insurance for these countries. And then also one of the other kind of barriers I think is that the incumbent banks or insurance companies offer very traditional things. That's what they're built on, that's what they're made from, that's what they're, that's the mindset. Whereas the younger companies, people like us guys are coming along thinking more about the customer and how they're operating and coming up with much more innovative products. So we're moving beyond just life insurance that, for a whole year to actually life insurance for a day, a moment, or an event, or travel insurance for a day, or these things, just for a day, just when you need it, that's the insurance. Or just when you want a loan, you can take out a little micro loan for a week or a day just to get you over those, things, or just to buy a mobile phone, or just to buy one thing. So I think this is what, enables us to sort of, grow the market and why it's exciting.
Yeah, no, I completely agree there. I think one of the things we find really exciting about embedded finance is that it allows you to no longer have these one size fits all, what works for the middle, higher income populations, just figuring out how do I now distribute the same thing to people who are lower income, but to actually say, okay, what's a more relevant product? Yeah. And how do we embed that in a way that's going to show that relevancy?
I mean, for example, we found a product that it was just a relatively small amount that you might think a couple of dollars, but people wouldn't pay that every month. So we just divided that by every day in the month and just let them buy as much as they want during the month. So that's makes it much more flexible, and that made a product not selling to now, 1.5 million customers in 18 months. So it's like, if you can be flexible and work with the customer, the way they operate, the way that they see their life, then I think that helps.
And then the topic of financial inclusion in the continent has been, a big topic for a very long time. And, like in Cellulant, we like to say that what we are really creating is economic inclusion, right? Maybe in the last 10 years, the last numbers I saw was almost 23% in terms of financial inclusion. And that has moved to about 50% just with I would call it almost the fintech part of the developments and improvements that have happened overall. So the way we kind of see it is that now getting deeper and embedding, because, financial inclusion on one hand, you just say, fine, now I have a bank account, then what? Right? What do I do with this bank account? This bank account probably has, as low as $50 sometimes in terms of the cash that is available in that wallet. So how do you really move people from financial inclusion to economic inclusion? Begin to allow them, even with $50, to have insurance, to have loans, to have investments, to start a small business and have financial tools, the full spectrum of actually being able to have a life that makes sense and that is dignified, and really, really beginning to move the continent from where it was a couple of years ago up to where it really should be. The kind of potential it really is able to. So it's, for us, I think it's more of the spectrum of how do you really move from financial inclusion to economic inclusion and really make a difference in the continent.
Yeah, and I think embedded finance allows you all kinds of different
Exactly.
use cases and ways in which to expand that
Able
access
to do
and
that.
quality of products.
Absolutely.
So I want to turn then to what will enable us to hit that, 30x growth or whatever it is. What's limiting you all right now when it comes to growing and scaling your embedded models? And that could be anything, right? It could be regulations, talent. I mean, I would be curious to hear, maybe it's infrastructure. Like what is it that's the limitations?
Yeah. So on our side, like there are a couple of things. The first you want to consider is a risk. And that's where like insurance comes in very heavy for us, right? Today we're able to insure every transaction against person dying, life insurance, also insure those devices to themselves, right? On that side, so that's one. The second will be the infrastructure bit of it. With the likes of FlutterWave and other big providers, we're able to collect better from customers, which is a very big part. You have to collect if you're giving out loans, right? So I think the biggest challenge is, for you to effectively embed finance, you need a lot of dependencies to make it successful and to make it sustainable. And that's where you're getting a bit of like it's like challenge, with scaling, but I believe that, with more companies like Cellulant, with insurance companies playing a very key part of it too. One thing I'll say is that before now, telling an insurance company to come insure your micro loans was almost impossible, right? Like we talked to, I won't mention names. Yeah, right. We talked to some of the big players and all of them, told us no very early on in the journey. But today we have a lot of APIs, companies reaching out to us, right? So it's an evolution which we're seeing and we love it. Also on the merchant side too, today we're partnering with a lot of aggregators like Cellulant, because they already have the rails, they already have the merchants on that side. So it's easy for us to just layer financing for their customers. And in some cases also financing for the merchants themselves too, right? So being able to work with, sort providers to like Cellulant is helpful. So I think for us, it's just timing really, like things are already lined up, everyone's working towards that goal. So in the next 5 to 10 years, I'm sure there's going to be a whole lot in that 30x or the 100 or 200x will be.
What did change with the traditional, like the insurance companies? What flipped the switch for them? And have you faced challenges? This is a question for both of you, but from a technical integration perspective, of working with those type of partners?
Yeah, I'll say, I think the reality of what's going on now is what's flipped the switch for them. So before now, even the telcos didn't believe in, even in Nigeria, telcos were giving out airtime in minutes. They didn't give out in seconds, right? So for most of the, and the banks too, the limits on some banks were like maybe $100 or $200 for you to open an account, right? So there were all those limitations there because they were like, hey, I'd rather make $100 from one person than try and make $10 from 10 people, right? But when they saw, what fintechs are doing today, I were able to use technology particularly to really address the larger markets in a sustainable way and even with cheaper costs. They decided, as in that was when the switch flipped. But unfortunately, the fintechs and the insurtech companies are moving way faster than they're able to keep up with, right? But I think the key thing here is technology and the appetite for the large markets, being able to make $1, $2 per transaction and be comfortable with it, right? And was very important for them. And seeing that trend happen right now is really, really very important in making that long-term change towards embedded finance, particularly.
Yeah, so one of the key reasons we set up our own insurance company was because of we were like an insurtech initially, but we set up our own insurance company was to overcome those that kind of negative lack of innovation inertia that you get in banks. And I mean, one of the things that I think you have to have an abundance of is patience in our business. You say 5 or 10 years. It's not going to change in a year, but it will change in 10 years. So you need some patience with that. And then I think the other key thing is finding the right partners that fit you. So not only are they going to invest in the product, like they say, the insurance product, but also in the technology to keep up with you. And that's again why we've got this our own technology. Our own technology. We're now in Lloyd's, so there's a massive capacity that we can bring to this thing because of it's okay doing a few loans or insuring a few people in one country, but what happens when that takes off? You want a partner to be able to add millions and millions of things with you as well. So I think that it's actually matching partners up that have got the similar commitment to you. I think the great thing with embedded insurance is that it makes things cheaper. Like to go and advertise and get one bank account or get a loan, it costs a lot of money. By embedding these things, the acquisition costs come right down, and that's really the key thing. And that allows us to provide our products at a much cheaper rate, a much more effective rate. We have identity protection product that normally would cost like $10, $12 if you sold it traditionally, but we can do it for like a couple of dollars because it's all embedded. So I think these things are all breaking down these barriers, and there is always going to be Allianz and all these big insurance companies, Old Mutual and that sort of stuff. They'll be always there, but I think they will start partnering a lot more with the likes of us or the companies now, so that we can just use their capital a lot more efficiently embedded on our technology.
Yeah. My favorite line is usually that it's not a United States of Africa. That is the biggest problem. It is definitely not a United States of Africa. And what that means is that I can have a very good solution that works in Kenya, that will not work in Nigeria, that will not work in Ghana, that will not work in Zambia. These are 54 independent states that have, first of all, nuances around customers, one, and then of course there's the regulation, etc. But a lot of nuances in a lot of these markets. And this for me and for us has always been the biggest impediment. It is complicated. It is complex to do it. You find that, if you ask any of these companies here, we are more, you're in Kenya, Nigeria, Ghana, the usual guys, right? So who goes to Ivory Coast? Who goes to the rest of the obscure, call them countries? So this is the biggest impediment, right? And everybody, I think, is working very hard to kind of move that along. But if it were United States of Africa, then it would be much easier. But I think that's the biggest problem at the moment. You have to really deal with a lot of complexities in different markets. And well, the interesting thing right now is that then you have a lot of localization that is going on in different markets, which is great. But that is slow in itself. But there's a lot of, we call them almost African continental regulation that is trying to come together. But that will take its time. Yeah, so I'd say that's really the key impediment.
No, and I think we've all seen examples of that, of, the Bank of Ghana shutting down something that,
Exactly.
was meant to work across multiple markets.
Yeah.
But, so I think that infrastructure, especially when you're setting up the infrastructure, for embedded finance,
Horrendous.
having that, it's really hard. I want to turn then to the we've spent so much time talking about the positives of embedded finance, of all of the ways it's good for customers and the ways in which, it's going to empower financial inclusion. But we don't talk as much yet about risks, right? Especially from a consumer protection perspective, you think about a seamless experience can oftentimes lead to lack of transparency. It can lead to risks that the customers take on. And that's just one piece of when you think about this, explosion of embedded finance, what potential risks are. So I'd love to hear from each of you of what do you see are the risks of these type of models, and how are you guys all mitigating those risks in your businesses?
I can do a quick start, but the way you see the biggest, call it almost from a mitigation risk perspective, is actually ensuring. So what we have done in terms of taking the wallet. So you're starting off from the wallet. You have a wallet. So I'm giving you, first of all, a bank account, right? So I have something to actually look at to see what are your transactions, right? I'm not waking up in the morning and deciding that Milkah has decided she wants $20, give her $20 to do what? Right? I think that the biggest part of being able to mitigate risk has been about that, because then the ecosystem allows you to actually be able to, first of all, I've given you a bank account. That's one. Number two, I am allowing you to actually buy something. You only buy something from a merchant, right? Or and merchants range from every part of the ecosystem. So it means you're coming to use your wallet to actually buy a good or service from a merchant, which means that when I'm now telling you that I'm going to give you a loan, or you are going to get insurance on that loan, or whatever it is that you need to do, or these are the investments you need to make, etc. You're doing it on the back of transactions that are real. It's actually on a service that is present. It has data which you can check on how well you do actually pay, what you do with the money, what different things do you actually plan on. So really it takes the good part of the banking bit and makes it a little sexy and a little faster to actually be able to do it. So I think just being able to not just lend for the sake of lending, or just offer all sorts of investments for the sake of it, but really embedding them on services that makes sense. So you're really starting from very far: a wallet, merchant services, goods or services, and then layering on what you need. This is the biggest from a risk perspective.
Yeah, fundamental to have that
Very
knowledge of the
fundamental.
customer
Yes,
from the transaction.
absolutely.
Yeah, so with insurance or embedded insurance, it's really easy, or any of these financials, it's really easy to almost hide the transaction inside the embedded service, so that people don't really know that they've got it, and they just pay whatever it is, a few shillings or dollars or whatever it is every month, and hopefully it just carries on recurring, and you get this, for us, an insurance company, a great loss ratio, and that's brilliant. But long term, and anytime really, that's not good for the customer, and there's many examples, recurring examples, particularly in the West, of that type of like institutional fraud, if you like, that happens. So we have to work very hard. When you embed in a product, it needs to be relevant. It needs to be, the benefits of embedding it makes it cheaper, but also you need to make people aware of the product at the same time. So we work hard at that, and then it's making sure that you've got a target, for our case, a loss ratio, and make sure that you're kind of honest with that and work at it, either by dropping the price or by and by kind of making sure that people have knowledge that they are able to make a claim. Many of our customers, it's the first time they bought insurance, so they don't know really what it's for, almost, or how to claim. So we have to make sure we educate them, and educate them financially. That's not just, in most places, everywhere in the world, really, financial education is very low, and we need to work as part of that embedded infrastructure to, I think, educate the customers and educate our partners and push out material. So you've got that, great income and great, kind of low cost access to customers, but then you need to treat them fairly and bring that, bring those things out into the market.
Yeah, I think for us, whenever we see embedded insurance models, we want to see not just the embedded, how are you selling the product, but what's the automated way you're doing claims? Yeah, because you can't just sell things in a seamless way. You've got to pay money back in a seamless way.
But that's the odd thing about insurance. And if you look at, anywhere in the world, the adverts for insurance are like almost like they prefer to have jokes and things like that. They don't actually educate about insurance. They don't tell you anything about insurance. They tell you about some cuddly toy or something. So where we, what we need to start is, why is the claim? So when we work with a partner, it's why do you want that product? Why is it good for you? Why is it good for your customers? Like you're protecting that thing. And then we can just educate them on that, make the product relevant for that thing. And that makes, the embedded sort of whole service longer, fairer for the customers. And you can work on the loss ratio by educating people and making sure that, things, because the alternative, which is the way big insurance companies sort of deal with it, is, well, we can't sell that insurance then. So then the people are left with that risk. So you've got to do both. You've got to start with the claim, really, not the insurance policy, which is what insurance people do normally.
Yeah. FT, turn to you. I mean, buy now, pay later has gotten its fair share of sort of controversy around risks for consumers. How do you guys mitigate those risks? How do you think about that?
Yeah. So first, I'll start off with this, right? So for us, BNPL currently in Africa is still at a very early stage, right? It's not a fad yet; it's a necessity, right? Because most Africans are paying cash for everything, right? Being able to pay in installments for a product isn't a nice to have in the real sense. I say this all the time. Imagine my parents could buy my laptop very early on and pay in installments. I started programming and coding way before I started, right? But because I had to save for every single child, we had to take our turns getting that laptop, right? So there's the first part of BNPL being a necessity in Africa. That's the first part. The second part is that we now have a very, very good advantage. We've seen what has happened with credit cards in developed countries. We've seen what has happened with, customers being overgeared, being indebted, right? We are able to build that into our product from the beginning, educating the customers, ensure they don't take more than they can pay back, because ultimately, us protecting the customers means protecting our business. If our customers are defaulting, then we're losing money, right? So it's a two-way street there. So for us, right, the key thing we're doing is we're trying to ensure that customers are only able to take on credit that they can pay back for, right, for things that they need, right? Which is where the embedded part comes in, right? I won't embed financing in a gambling hub or in a gambling solution, or neither am I going to embed financing for now, maybe not in a party, vendor, right? But party service, right? But then I'll happy to do that with car financing, smartphone financing, and other things, right? So, with embedded finance, there's better control. So you get to choose who you want to finance and how you want to finance them. So then it's easier for you to manage risk on that side. Then the last part really is essentially, on the distribution side. So one thing embedded finance does, it drops costs significantly, which you mentioned, right? Because you're able to distribute better, smarter, and faster, right? It means that I can then take on some more risk, right? Why? Because I'm acquiring my customers at a cheaper rate than the bank is going to acquire their customers, right? So by being able to sell cheaper, in some cases at a positive costs, right? Because merchants are paying you a commission for every transaction. So it's possible that you're making even far more than the bank is going to make, right, on that. So a lower cost means that I can take on a bit more risk, on that side. So ultimately, embedded finance in itself, was designed to mitigate against some of these risks in itself, right? And then, but notwithstanding, we also need to be careful that we don't start inheriting the problems that a lot of countries have now, by then say, oh, let's start financing different type of items, let's start overgearing our customers, let's start layering credit on credits, which is where now start getting customers indebted, and then losses coming a whole lot later down the line. So it's good for us because we're at a very early stage, so we're able to control things better, but then the market is still very, very, very huge. So for now, I won't see the BNPL problem as a BNPL problem in Africa yet. till, you know, we have evolved to that point where we are now, you know, maybe where the West is right now with credit. But for now, I think we're still in a very comfortable place, and we're trying our best, especially with Credpal, you know, to mitigate those risks since we can see them upfront.
Yeah, that's great to hear the focus on affordability and on productive uses of those kind of those loans, because I think, yeah, that's what we're not seeing in many other parts of the world.
And maybe I may just to add on what he said, it's not a novelty, right? People do it today. People are borrowing for things they actually need, and because they've never had a bank account, so nobody has actually given them debt before. You now have somebody who's actually willing to give you debt and allow you to pay for something a bit more, in a bit more organized way. The interesting thing is that the call it almost the how do you call it, the indebtedness, not paying. The name is getting lost.
Defaults.
Yeah, the default rate. The default rate for most of these guys is actually very low, because they almost value the fact that suddenly somebody is seeing me, is able to give me debt that I can actually be able to get basic needs. It's not fun, right? It's basic needs. So they really, really value it. And they at the moment, as he says, is so young and so basic that it's almost inherently not a problem, right? Because you do it and make sure that you pay, because next time you want the company to do it again. Yeah.
It's great. How are we doing time-wise? 5 minutes? Okay, well, maybe with that, I'll see if there are any questions from the audience. Happy to open it up.
My name is Chanda.
Yeah. Not very well.
Maybe speak up if you want the microphone.
I think you can hear them.
I can hear you.
It's quite loud.
Better, okay.
So I've got two questions for
Chanda, I'm sorry to interrupt you. Your voice is loud, but there are a couple thousand people watching virtually. So.
So great discussion so far. I thoroughly enjoyed this session, very insightful. So thank you so much to the panelists. So my question to Harry. Harry, you spoke about a product that you have. And I think you were charging something like $1 per month to your customers. And then you had to split that down. I think you changed the rate to a daily rate. So could you just take us through that journey and how that worked? And then my next question is for Fehintolu. I hope I've pronounced your name well. Okay, so what is your highest loan threshold or your loan limit for your customers? And if you're regulated, who are you regulated by?
Okay, well, I'll do my one first then. So yeah, so we launched this product on the premise of a monthly fee. It was with a telco, so we were just putting on their airtime kind of along with their airtime payments. But the customers didn't buy it because of it was as I say another $1 or $2 on their monthly payments, and people don't wake up thinking about buying insurance, so they don't think about it. So then what we did is we thought, how can we do this? So then we just said, right, let's try a daily rate, so that with their digital wallet, that they can pay us, when they get a certain small amount in their digital wallet, then the payment can be transferred. And so what we found is that people still don't necessarily buy the full amount every month, but they buy some of it. So if the cover was, say, for $1,000, as a limit, if they'd only paid half the time, they would get $500 as a limit, or $25, or $250, or $750. So the whole thing sort of prorated out depending on how much money that you've purchased. And then it's a little bit of kind of gamification, if you like, with the customer, because of now that they've got an insurance product, you can tell them about the insurance product. You can say about the benefits, so that next month they value a little bit more. So then they kind of more get used to it. And also we get claims, so we can tell people about the claims so that people can actually learn, that's what insurance is for. And things like COVID and all these, things we've had have been a benefit for that. So during that period, we saw also a much better kind of upswing of people understanding what risk is about. People died, people got, out of work, people got these things that meant that they felt like they wanted insurance and they understood it a bit more. So the journey was during the COVID period as well. So it enabled, and the outcome of this is that people now have this insurance and they value it. And we know they value it because of, they continue paying for it. And they continue, downloading the, understanding about the claims, understanding about the information, and it enables us to really educate them a bit more on the whole insurance value chain.
Yeah. Then for us, so the maximum you'll get today is somewhere around $5,000. So that will get you most of what you want. Maybe a very cheap car too, probably. Yeah, and then second one was on deregulation. So on the lending side, regulation is a bit fair. So you have the central bank and the state governments regulating, but getting the lender's license isn't so hard, right? Because you're giving out money. So people love people give out money, right? So it's only on the deposit taking side that, the regulations are a whole lot stricter. So for instance, if you're trying to embed other services into your solution, then you say you need to get more licenses on the banking side or deposit taking side.
Super. Thank you for those questions. Great. Well, thank you to our panelists. Really great conversation. Appreciated all of your insights and thank you all for joining. I think we're.
Thank you.
Is it? Well, I'll pass it over to you, Leland.
Thank you, Amee. Thanks, everyone. I would like to invite up our next panel. It's cryptocurrency, redefining the meaning of money. We have a pretty enthusiastic and outspoken group of cryptocurrency operators and actors. And I will mention that this is our most subscribed session among our virtual audience. And so please make sure if you have questions or you're speak into the mic, because we've got a few thousand people tuning into this from around the world who weren't able to travel to Washington today. So I would like to invite up Pomi, our moderator, if she's around. Pomi, I'm sorry. Pomi is a partner at Baker McKenzie and a thought leader in the crypto space. And we're very glad you're here to moderate. I'd like to also invite up Chris Maurice, CEO. Ray's around. We lost Ray. Obi, please come up.